The federal government shutdown in the United States is finally over. After days of uncertainty, lawmakers agreed on funding, and the government is back in operation. But as this crisis ends, some experts are warning that Bitcoin could be walking straight into a liquidity storm. What does that mean? And why should crypto investors care? Let's break it down in simple, beginner-friendly terms. A government shutdown is a big deal. When it happens, federal employees aren't paid, government services slow down, and the financial system can feel the strain. Investors often respond by moving money around, pulling cash from certain investments, parking it in safer assets like treasury bonds, or simply waiting to see what happens. This sudden movement of money can affect global markets, including crypto. Now that the shutdown has ended, you might think everything is fine, but the truth is more complicated. The end of the shutdown doesn't automatically mean stability. Some analysts say we could see a liquidity storm. In simple terms, liquidity refers to how easily money flows through the financial system. A liquidity storm happens when there's not enough cash moving smoothly, when banks, traders, and investors suddenly need cash, but it isn't available fast enough. That can cause prices to swing wildly, even for Bitcoin. So why is Bitcoin involved in this? Bitcoin is not tied to any single government or central bank, but it is part of the global financial system. When big money moves around in banks, hedge funds, and large investment firms, Bitcoin can feel the impact. If liquidity dries up, some investors may be forced to sell Bitcoin to cover other losses, which can trigger sharp drops in price. Historically, Bitcoin has had a complicated relationship with traditional markets. Sometimes it acts as a safe haven, like digital gold. Other times it moves in sync with stock markets, especially when big institutional investors are active. During times of financial stress, liquidity issues can lead to forced selling, margin calls, or panic moves that affect crypto prices. Experts are pointing to several factors that make this moment risky. First, many hedge funds and institutional investors now hold Bitcoin as part of their portfolios. If liquidity tightens in other parts of the market, these investors may need to sell Bitcoin quickly to meet obligations elsewhere. This can create sudden downward pressure on prices. Second, the end of the federal shutdown may trigger fiscal and monetary adjustments. For example, the government may need to borrow more, or central banks may adjust interest rates. Both of these actions can influence the flow of money in markets. If cash becomes more expensive or less available, some of that pressure can spill into crypto. Third, retail investors, regular people buying and selling Bitcoin, are watching the news closely. When headlines talk about liquidity risk or financial stress, some people panic and sell. Even a small wave of panic selling can magnify larger liquidity pressures, especially in a market as volatile as crypto. Now you might be wondering, should this scare Bitcoin investors? The short answer is yes and no. Volatility is normal in crypto, and liquidity events can cause rapid swings. But it doesn't necessarily mean Bitcoin will crash forever. In fact, some investors see opportunities during these storms. Buying when others are forced to sell can be a chance to acquire Bitcoin at lower prices. One key thing to understand is that Bitcoin is different from traditional assets. Unlike stocks or bonds, it isn't dependent on government revenue or debt. That's why some investors see it as a hedge, a way to protect against certain types of financial stress. But during a liquidity storm, even Bitcoin can experience sharp, temporary drops as money flows are forced in and out of positions. Another factor is market leverage. Many traders use borrowed money to buy Bitcoin, known as leverage. In times of liquidity stress, lenders can demand repayment quickly, forcing traders to sell their Bitcoin. This can amplify downward moves in the price, creating a cascade effect. These events are sometimes called liquidation cascades, and they've happened several times in crypto history during periods of market stress. It's also worth noting that liquidity storms don't last forever. Once cash flow stabilizes and investors regain confidence, prices can rebound. This has been true in past crises. Bitcoin has survived numerous shocks, from exchange collapses to sudden regulatory changes, and often recovered over time. So what should a beginner investor take away from this situation? First, understand that Bitcoin can be affected by the broader financial system. Even though it's decentralized, it doesn't exist in isolation. Big money movements, liquidity shortages, and global financial events can impact prices. Second, it's important to manage risk. Don't invest money you can't afford to lose. Consider your portfolio and make sure you're prepared for sudden swings. This is especially true in moments when liquidity events are possible. Third, think long-term. Short-term price drops during liquidity storms can feel scary, but Bitcoin's history shows resilience over time. Many investors use these periods as an opportunity to buy or hold rather than panic. Fourth, stay informed. News about federal funding, interest rates, and market liquidity can give clues about potential market pressure points. Watching these developments helps you anticipate volatility, even if you don't trade actively. It's also helpful to understand that markets are cyclical. Liquidity stress is one part of the cycle, the storm. After the storm passes, stability often returns, and prices can recover or even surpass previous levels. For Bitcoin investors, patience can be a powerful tool. Some analysts even suggest that liquidity storms can create new opportunities for adoption. For instance, when traditional markets tighten, some investors may look for alternative stores of value, like Bitcoin. In the long term, these events could strengthen interest in digital assets, despite short-term turbulence. At the same time, it's crucial to avoid emotional decision-making. Selling in panic can lock in losses, while informed and measured choices can help you navigate volatility. That's why understanding liquidity, market flow, and investor behavior is so important. Another point is that technology and exchanges play a role too. Platforms with robust liquidity and safeguards can help mitigate panic selling. If you're using reputable exchanges with good security, your ability to manage risk during these events improves. Looking ahead, Bitcoin may face a few days or weeks of volatility as liquidity adjusts to the end of the federal shutdown. Some traders may sell to cover losses or margin calls, while others may enter the market looking for discounted Bitcoin. This back and forth creates sharp swings, but it doesn't mean the end of crypto. For investors who are new to crypto, think of this like a storm at sea. The waves may be high, but if you're prepared and keep your ship steady, you can navigate through safely. Liquidity storms are part of the market ecosystem, and understanding them gives you an advantage. Finally, the key takeaway is this: Bitcoin is not immune to global financial pressures, and liquidity events can create rapid price movements. But these events are often temporary, and they can even create buying opportunities for informed investors. The end of the federal shutdown may be just the start of a volatile period, but it also sets the stage for potential growth once stability returns. So as Bitcoin navigates this post-shutdown environment, investors should stay calm, informed, and patient. Expect turbulence, but don't let it drive fear-based decisions. History shows that those who remain steady during market storms often benefit in the long run. If you found this explanation helpful, make sure to like the video, comment your thoughts. Do you think Bitcoin will survive this liquidity storm or face a major drop? And subscribe for more clear, easy-to-understand crypto updates. Don't forget to hit the notification bell so you never miss our next video, where we'll explore how global financial events continue to influence Bitcoin and other cryptocurrencies. Remember, in crypto, knowledge is your most powerful tool. Stay informed, stay patient, and stay calm, and you'll be ready to navigate whatever storms the market throws at you.